Welcome to the Keiser Report with Max Keiser and Stacy Herbert. In America and around the world, people were anxiously looking and listening to Ben Bernanke. Let's hear a little bit more. Stacy Herbert.
Max, Ben Bernanke at the end of last week was in front of the Senate Committee on Banking. And the headline from that meeting goes, Federal Reserve Chairman warns of unusually uncertain outlook for U.S. And because of this unusually uncertain outcome for the U.S. economy, he remains prepared to take further policy actions as needed. We don't know what this means. It could mean more quantitative easing. It could just mean the new fabricated policy to save the economy.
Well, yeah, they say that Ben Bernanke has no more bullets left in his gun because interest rates are already at, zero, and there's not much really you can do to stimulate on his side of the big financial picture in terms of injecting more liquidity, and they've already done quantitative easing, as you point out. The problem is that since it's a debt-based currency, any action going forward is only going to increase the indebtedness. This is the insanity. This is what Einstein warned about. Doing the same thing over and expecting different results is insane. And this is exactly what Bernanke is. He's totally insane. Think about what's happening in France. They're insane also. They want to sell state assets to pay down debt. But who's going to buy the assets? Well, somebody is going to borrow money. Who are they going to borrow the money from? Banks. Who owns the banks? The government. So who's going to effectively have to finance those purchases but the people who will be asked to be put into further indebtedness? They're actually increasing the debt.
In the case of the United States, Max, Ben Bernanke, in his testimony, blamed the uncertainty on Greece, first of all, and then he blamed it domestically on the banking sector, saying that they still have a lot of these bad debts that they continue to have to write down or that are not being written down yet, and thus preventing them from lending out further. The other problem he sees with the U.S. economy is the unemployed. And to Banking Committee Chairman Senator Christopher Dodd, he says, part of the reason I'm concerned by the situation is that this is the worst labor market since the Great Depression. People who are unemployed for a long period of time see their skills atrophy. They may become demoralized, and short-term unemployment becomes long-term unemployment. We need to be very concerned.
They shipped all their jobs overseas. They have no jobs left. Therefore, they have no savings, no capital. And you can't have capitalism without capital. That's why it's kind of debasing and degrading into a kind of neo-fascist / pop consumer state.
Well, let's look at the first issue he talks about, and that's the banking sector. They're still laboring under all these bad debts. And what are they doing? They need to de-risk, don't they? Well, let's look at this next headline, Max. Why the new fetish for black swan insurance means markets are begging for another crisis. Yes, this is Business Insider reporting on Bloomberg News, which reported that there's a flood of financial institutions are now offering this black swan insurance from these unpredictable events that predictably happen every quarter, it seems, and cause the markets to crash. They're hedging against risk, and actually de-risking are not the same.
That's right, because simply removing the risk would be to allow these debts to deflate and go through the normal course of a recession. But by creating more products to hedge against the risk, you're increasing the amount of speculation and borrowed money, so you're exacerbating the problem. That's problem number one. Problem number two is the black swan insurance is inherently a fraudulent product. Black swan insurance is a scam. I saw it before in the 80s when I was working on Wall Street. We called it portfolio insurance, and it led to the stock market crash of '87. Black swan insurance is absurd. The only way you could price it, by the way, it would be 100 cents on the dollar. Given the extreme nature of the risks that they're hedging, the only price that makes sense under the option volatility formula would be 100% of the equity. So who's going to insure a dollar with a product that costs $1? It's insane. But they're going to sell it to these portfolio managers who are basically passive, which is to say brain dead.
Well, these brain dead investors at these passive funds are, of course, managing the pension funds of the future generation. That takes us to the next headline. Great news. Most young Americans expect Social Security to collapse. According to a new USA Today Gallup poll, 3/4 of those 18 to 34 don't expect to get Social Security check when they retire. So talk about black swans, which are being hedged all over the place and sold to these very people. They're expecting collapse. It's like a certainty. It's not even a black swan. It's a white swan.
Well, it's a joke because they call Social Security an entitlement. But people paid into it. It's my money. In other words, if I go to the bank and I say, I'd like to take the $1,000 out that I deposited last week, and they say, well, you're not entitled to your entitlement. I'm like, well, no, that's not my entitlement. That's my money. Social Security is owned by the people who put the money into it. It's not an entitlement. That's a euphemism for, oh, we're abdicating our role as fiduciary stewards of the economy, and instead we're just going to give everybody on Wall Street a huge bonus, and everyone else can go pound sand.
Remember, it was the previous Fed chairman, Alan Greenspan, who convinced Congress to raise the tax on workers so that towards their Social Security. And that increased the pool. It created a savings pool for the baby boom generation that everybody foresaw that this was going to be a big strain on the Social Security system. And $2.5 trillion, instead of saving it as they were supposed to, they used it to fund their wars and the tax cuts for the rich.
That's exactly right. Alan Greenspan. Before Reagan made him the Fed chairman, he was working some fakakta, wonky policy group and think tank in Washington, and they said, raise the tax on the workers and we'll use that to fund retirement. But Reagan, when he got in office, he simply stole that money.
So you see that these 18 to 34-year-olds are expecting collapse, and they're doing nothing about it. They're just like taking it passively because it's the federal government. You can't do anything because they'll just kill you. Here's, on a local level, what you see. California officials' $800,000 salary in city of $38,000 triggers protests. So this is hundreds of residents of Bell, California, a town of just 38,000 people. It's one of the poorest municipalities in all of Los Angeles. And they discovered that their chief administrative officer, Robert Rizzo, earns $787,637 per year with an annual 12% raise. This is 38,000 people in this little town.
Yeah.
The police chief makes $457,000, and council members earn almost $100,000 a year for part-time work. Now, to put this into the context of a story we only covered recently on the Keiser Report, that the Queen of England costs the taxpayer less than $1 per person in Britain. The chief administrative officer, Robert Rizzo, in this tiny town of Bell, California, costs each taxpayer, each citizen, each child, each baby, costs $21.
Yeah, and it just shows that the wealth and income gap is widening to these absurd levels. And depending on how you have leverage, you see, it used to be in America, if you had a good idea, you had leverage. It was a meritocracy. But now if you've got inside connections and you're a crony capitalist and you've got a gun, you can get ahead.
Well, but it's also our theme of neo-feudalism that we see in the world. So we have these democracies. They overthrew all the aristocracies and the monarchies from, well, in France and in the U.S. we did. And then we have these new monarchs who are even more expensive than the old ones.
Well, these are the barons and the dukes and the feudal lords of the new neo-feudal system that's replacing the American free market system.
But speaking of dictators, let's move on to the next headline. Blair in secret talks with Gaddafi. Lockerbie family's fury as ex-premier is treated like a brother by dictator just days after denying links with Libya.
Oh, no, not Tony Blair. Oh, no. Oh, the human rights abuser, war profiteer, Tony Blair. Oh, boy. I can't believe this guy is still walking around. All right, what's Tony Blair up to now?
So Tony Blair was flown to Libya for secret talks with Colonel Gaddafi just days after denying he was an advisor to the dictator. Mr. Blair was entertained as a brother, and they discussed a wide range of international and domestic issues, including lucrative investment opportunities.
Yeah.
So remember, Tony Blair now works for J.P. Morgan, and we're talking about dictators. We're talking about these elites, these neo-feudal monarchs who control the world, who control our financial systems. And it brings you also, it ties together with David Cameron, who was just in the United States last week.
Yeah. According
to David Korn, who's the Mother Jones Washington correspondent, look at his Twitter, Cameron asked about BP Lockerbie role. Role of BP is for BP to explain. Shoots down need for inquiry into BP Lockerbie. Yes, Max, in the United States, apparently senators and congresspeople want an investigation into BP because they're shocked to discover that the terrorist who was accused or charged with downing the Lockerbie plane, Pan Am Flight 103.
190 Americans died.
Yes. They're only now saying, oh, we're shocked that BP was behind this. But at the time, 2007, remember, you could see the photos of Tony Blair standing with Muammar Gaddafi in front of the farting camels of Tripoli, and and they were doing the deal to release the terrorist in prison. And right away, BP got a deal of like $1 billion with Libya. Yeah,
this is blood for oil. This is Tony Blair's epitaph. Blood for oil, Tony Blair.
But it wasn't an issue then. It was reported widely at the time. That's why he was in Libya.
That's why it helps to have a media company and the mainstream media under your thumb in the United States, because you can distract and bamboozle the vast population with kinky celebrity game shows, etc. But, to get to the nettle of this important equation of blood for oil, servicemen dying for oil companies, it takes years before that gets into the public domain, and by then, things are watered down, aren't they?
But it also puts into context this alleged investigation by Congress into BP, because the fact is they have known about this for years. They know Tony Blair. They awarded him a Congressional Medal of Honor, and they know that he was just in Libya doing this deal with him. They don't care. They're just pretending for the masses so they don't get upset.
Tony Blair, the zombie that just won't go away. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
When we come back, much more, so don't go away.
Every month, we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
Welcome back to the Keiser Report. Time now to go to London and talk with Ned Naylor Leyland. He's a fund manager at Cheviot Asset Management. Ned, we've had loads of demands from viewers of the show to talk about silver. You are an expert on silver investments, so give us a brief history of silver's role as a currency and as central bank reserve and where it is today in 60 seconds. Go, Ned.
Yeah, thanks for the softball question, Max. I think obviously most of your viewers are fairly aware of the role of silver as a currency historically. I think in sort of double-digit terms around the world, the word for silver and money is interchangeable. Silver is probably more relevant at the moment in terms of of a monetary asset over in Asia, where the Chinese are obviously buying a fair amount of the stuff along with gold through their bullion shops. But look, I think we're all of the mind that fiat paper currencies are in a state of distress, if not collapse.
Now, you mentioned China. That's interesting because one little factoid, I don't know if you've done much study on this or not, but during the 1920s and 30s, during the Depression, of course, China, from what I understand, was on a silver standard. Isn't that correct?
Yeah, China have been on and off. And actually, it's funny you bring that up because it's certainly true that the various international leaders of history, probably ones of ill repute in terms of modern historical context, operate on silver standards. It's absolutely true. And the Mao regime were involved with that, as were actually the Mongols preceding that. So there's a lot of history of Chinese involvement in silver. But as there is all around the world, this is not something that could be laid at the door of any particular country. Certainly here in the UK and in the States, it's less well understood within historical context than it might be elsewhere.
Okay, now one of our viewers, Ned, goes by the name of Tears of the Moon, asks, why is silver 65 times cheaper than gold when only 9 times more silver is mined per year versus gold, and the stockpile of silver bullion is 10 times less than of gold?
Well, I would love to be able to give you a straight answer on that. I think everyone's looking at the gold-silver ratio with some interest, and obviously on a historical basis, we're at an extremely high level. I mean, for what it's worth, I'm not sure it won't go a little bit higher if there's a deflationary downwave and another asset collapse phase, which I think a lot of people are expecting. But in terms of why that is, well, I think this all plays into the whole discussion about silver being an extremely strategic resource in terms of global commodity markets, probably alongside water in that context, in as much as there has appeared to be intervention on behalf of industrial users and other users of the metal, which has led to a lower price than ordinarily ought to be the case. But yeah, I mean, historically, I think that the right level looks somewhere between 12 and 16 to 1. And we're up in the 60s. But as I say, I think it could go higher in the meantime.
All right, now here's, you mentioned deflation, and I really want to pick your brain on this idea. Since the credit collapse started in 2007, 2008 period, we've been basically in a period of deflation, and the precious metals have done well. Now, to many, this is counterintuitive, but there is an economic case to be made for why precious metals should do well during deflation. Can you speak on that a little bit?
I think probably the whole argument about inflation and deflation has got a bit skewed. I think the reality is it's a lot more complicated than people make out. Sure, asset collapse phase lead to what people would term a deflationary environment, but I would argue that the average man in the street is not witnessing lower prices in the things that he's buying. So I would be a bit cautious about referring to anything as either an inflationary or deflationary environment. I mean, for what it's worth, I'm from the camp of anticipating serious stress in the unbacked fiat paper environment. So, you know what, I do see the potential for hyperinflation, which I think is probably the reason why it's doing well more than anything else. I think people's concerns about the true nature of paper money is more where this is leading, as opposed to necessarily what you would describe as an ordinary economic discussion of deflation versus inflation, Max.
Okay, so deflation and hyperinflation are two sides of the same coin. And what we're seeing here with asset price deflation is killing the global credit market. And there's no velocity of money. There's no multiplicity of money. The money supply is shrinking, and this would normally be bad for precious metals, but it's so severe that that what the bullion purchasers are now looking for is hyperinflation or a currency collapse. As you point out, the fiat currencies are collapsing. Now, let's move on to silver. Has also been in the news this year since the shocking testimony by Andrew Maguire via GATA. Bill Murphy and J.P. Morgan has been engaged in silver market manipulation. Tell us about this silver manipulation by J.P. Morgan. Also, the role of silver ETFs, the exchange-traded funds, in the manipulation, if any.
I'm not sure about direct involvement with the ETFs in the actual manipulation. That may or may not be the case. I think it's very difficult to hang your hat on stuff like that, and I would probably try and avoid doing it. But what I would say is that the evidence seems fairly clear that massive amounts of paper silver have been deployed by institutions in order to depress the silver price. What exactly the rationale for that is, I'm not sure. But I think that probably the most telling thing of all about this story is the fact that it was a fascinating debate that took place. And, J.P. Morgan were accused of effectively high crimes. And, we've heard nothing since, which I think sort of gives context to what really took place there. One would have expected by now at least some attempt to fight back against these allegations. But I think the very fact that hasn't happened is quite telling. I thought it was very interesting yesterday as well, seeing Bart Chilton talking about the financial reform bill, where he was talking about how they've now been allowed to enforce speculative position limits on the COMEX. And he was talking about how this was a heroic piece of legislation. Now, forgive me, Max, but I'm a bit of a skeptic about all this. I think by now they ought to have done something. So I'm pretty skeptical as to whether or not that's actually going to happen. And it was interesting that while he called this bill heroic, he also drew reference to the fact that global commodity markets, the regulated part of that is $5 trillion worth. And he then pointed out the over-the-counter market is $600 trillion. So quite what can really be done at this point within the context of the existing discussion, I'm pretty dubious. For what it's worth, I think that the market itself will drive silver much higher. I think that people, investors taking a view on global currencies will drive the price higher absent involvement from the regulator, which is a shame and is a reflection of where we are, particularly after what happened with Mr. Markopoulos as well, referenced the Madoff case. It just seems as though in order to get the price higher, it's going to be a case of investors taking physical delivery as opposed to the regulators doing anything about it. Okay, so you don't see much of a role in terms of the exchange-traded funds in this big manipulation question. You think J.P. Morgan, as they're being
alleged to be manipulating these markets. There's a good case for it. Certainly they've got a huge position, something like 30,000 contracts that, well, I mean, I don't know what they'd be hedging with that contract because unless they found a planet somewhere in the outer rings of the solar system made entirely of something that would put silver out of business, I'm not sure. It seems a cosmically short position that makes no economic sense. And going forward, you think the only way to bust the manipulation cartel is for folks to take physical delivery. Wasn't there a move about 6 months ago? Didn't Sprott Asset Management, wasn't he very vocal in saying, let's take physical delivery? What happened? Was he got to? Well, how come they didn't go forward with that?
No, I think that obviously he's talking about a silver trust as well, and I think that there's been some moves in that direction. But I mean, speaking from a personal perspective, I've thought over a period of several years about taking delivery through COMEX of physical metal. But you know what? I worry too much about the exchange risk. I wouldn't want to do that because, frankly, you have a period of settlement where I wouldn't be comfortable with that. I think probably a lot of people that invest in silver are, let's say, the more opinionated element of the gold bug community, and I think that they're probably the greatest skeptics of all about the exchange and the way that these contracts are delivered upon. There is a move. There's no doubt that the bullion sales are going up. I can tell you for a fact that in London it's very difficult to get hold of physical silver. If you can get it, you're getting it in small amounts and enormous premiums. And I just think over time, the lower price point entry for silver versus gold, as people start to take a view against the 40-year global unbacked paper money system, will lead to people wanting to invest in silver as a store of value as much, if not more, as gold, particularly bearing in mind the fact that above-ground bullion inventories in silver have been hugely exhausted over a very long time frame, as against gold, which, of course, has been stockpiled and the reserve has grown.
Look, if people are not willing to take physical delivery of silver, they are setting themselves up for a huge disappointment because J.P. Morgan can short phantom or naked short sell or counterfeit naked short positions in the silver futures market all day long. So unless somebody steps up to the plate and stands up to the cartel that is J.P. Morgan, I call them financial terrorists because they're destroying the global economy and causing poverty and famine around the world as a result. Innocents are getting dying because of this type of manipulation. If no one's standing up to them, then we shouldn't complain. We should just take our medicine, lie down, and believe like, oh, nothing's wrong. I've got another viewer question from Sheena Zamin. She asks, how long can J.P. Morgan keep shorting silver before the house of cards around them? This is exactly what I'm getting at. In other words, they can short silver forever. There's no limit to the amount of naked short sales.
OK, I'll bring up a little extra point here, Max, which I'm not sure I've ever heard you talk about. I'm a great fan of the show, and I think what you do is fantastic. But what I would say about that is rewind a little bit back to the end of the Bush term when I think, from memory, it was John Negroponte that was given some role within the administration, whereby effectively corporations that were deemed to be a national security of national security importance could be given a free pass respect of financial reporting. So I would make the argument that even if you say that the regulator could come in and things could be enforced and this, that and the other, I'm personally of the view that things are happening in such a irregular context, particularly in light of that executive order, that I'd be dubious about how one can expect J.P. Morgan to be forced out of their positions. Look, I very much hope that happens. All of us investing in silver see that as rocket fuel to the upside if they're forced to cover. Yeah,
Ned, well, what about all the government money that J.P. Morgan takes? How about if they return all the government money, we stop subsidizing this financial terrorist, we stop making Jamie Dimon's life easier by just naked short-selling silver all day long for bogus Christmas bonuses that he doesn't deserve, never worked for, he never worked a day in his life, this guy. Why don't we just stop supporting? Yep. Why are we giving welfare to market manipulators in America? Okay, we're talking about...
Hey. Max, I've got no idea, and I'm with you on this, look, all day long. But, there is a degree to which one has to sort of look at the situation as it actually exists and deal with it accordingly. And my personal view, and has been since 2001 when I first started investing in this metal, that the way to do it is to incentivize other people through information to take delivery of, let's say, small, medium, or even large amounts of physical silver, which puts stress on the underlying structure of this market. I mean, incidentally, my best bullion dealer contact in London tells me that something which hasn't been the case before is that his large allocated silver bullion accounts are being charged by the warehouses in a way they weren't before, which tends to suggest that some of the movement that's going on there is causing some stress and some cost to the warehouses. So I think it's difficult to know exactly where we are with this, but personally I get a sense that things are improving. Certainly the public's understanding of it has come on leaps and bounds, and it seems to be a subject which people are getting their teeth into now in a way they weren't before. So, while I accept what you're saying, I personally see silver as the Achilles heel of the cartel, for want of a better word. And I think it will prove to be the case that as the little man takes advantage of the situation of a low price point and drives the physical out of the warehouse inventory, the squeeze will come.
I agree with you. It is the Achilles heel, and it wouldn't be difficult to bust a COMEX if guys like Sprott up in Canada stuck to his word and did what he said he was going to do instead of chickening out at the last minute. All right, that's all the time we have for today, Ned. Thanks so much for being on the Keiser Report.
Not at all. My pleasure, Max.
All right, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Ned Naylor-Leyland. If you'd like to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.